Welcome back, everybody. Hopefully, you're all doing good. I do want to go over yesterday's price action. Starting off, I sat down around 8ish, looked at the levels, had this Asian low, had this London high, new week opening gap up here, previous new week opening gap, Friday the 13th. Let's see here, Friday the 13th, Sunday. Yeah, there you go. There's that one. 9 o'clock, we opened up and that left us with this AM low. Since we traded higher and closed higher, we had this low in place, which then I marked. We first ran up, took this high out. I watched it come down, rally through the low, and it started to come up, started trading higher. And we ended up closing with this bearish candle. That then permits us to go into a lower time frame to start looking for possible entries off of the 5 minute or the 1 minute, depending on what you see, what you're looking for to get into a potential short idea. Before we go down into a lower time frame, I didn't like the fact that we traded the high and we also traded the low. I didn't like that because that's in a way indecision. So I didn't like that. Didn't want to see that. That's the first thing. First thing that was in the back of my mind. Okay, I didn't like that. Went down to a lower time frame. Okay. See, we traded that, tapped the new week opening gap. Didn't really pay much attention to the new week opening gap either. Paid more attention to this high or low being taken, and the fact that we closed bearishly, which as you can see we traded down lower, and that was the move here. We traded down through the low. So when I came down, I immediately saw this breaker block. Breaker block. We also have this inversion here. This guy is sitting right there, which could also be a balanced price range, pulling it through. Okay, so balanced price range inversion. 10 a.m. We already tapped it once, twice. So for it to be a valid entry, it needs to come back. It needs to tap into this level. There's nothing else here. There's a breaker block, balanced price range. That's it. It needs to trade into that level for it to be a valid short idea. Price traded up into this level. As it did that, I was watching and I had, I had that thought, this is the entry. And that's where I should have got in. But what happened was, uh, prior to the fact, a couple of minutes prior to the fact, when family comes in and wants to distract you, wants to distract you, and didn't really like that because I like to focus. I don't really like to be disturbed when I'm focusing, when I'm really hunting my entry at that point and not just looking at levels on the hour. And then I honestly don't care if anybody comes in, disturbs me when I'm looking at an hourly or whatever. But when I'm going down into a lower time frame and I'm really hunting my entry, just about to take a trade, I really don't want somebody, over my shoulder. I just don't like that. Really don't like that. Just really don't like that idea. So, I had some family come interrupt me. They left. And, as soon as they left, it was like 1 or 2 minutes, came down, model. I was at that point, I was kind of still, battling with the idea of like on the hourly, we had that, the candle taking the high, taking the low. Don't really like that. Do I really want to take the setup? Do I not want to take? So it kind of took away from me being able to process that and being able to, you know, make up my mind uh, as far as am I going to put on the risk or am I not willing to put on the risk? So me not being 100% sure, I just backed out and said, okay, I'm just going to let it pass because I'm not sure if I want to put the risk on. Okay, so I just left it, let it pass, and rallied lower, and obviously, take profit would have been hit. There would have been a 15% stop on the trading idea, and it would have been a 22%, which is about 13. That's about 13 handles, uh, right there. It's about a nine or ten handle stop. See, the risk to reward is 1 to almost 1.5. So there was that. After that, I mean, we had this really massive rally, and price was looking really choppy, especially on the 1 hour, very choppy. So that brings me to another situation where I'm not in here looking for massive runs. I'm in here looking for price to give me the 10 handles, and then I'm out and I'm done. I'm not going to be holding on to it expecting it to run 20 or 30 handles. Since we're sitting in this sideways consolidation profile, it's messy on a daily. So I'm not in here expecting massive runs. That's the second point. Hence, the reason order block, fair value gap, I didn't take this. Didn't take it. Entry would look something like that, which would even be a smaller stop than the breaker block. But I don't want to be getting in here chasing it at this point. Okay, especially since the smaller ranges, I wasn't expecting it to run down this much. It's a Monday, not much news going on. Wasn't expecting it to run like that. So this was my idea, the breaker block, 5 minute entry. That was the idea that I saw. That's what I wanted. I didn't take it. Wasn't sure if I wanted to engage on the risk. So I stepped back and I left it. Left it to do its thing. I can come back another day and I can find a setup if the setup presents itself. But I don't want to be jumping in there and then, put the risk on the table when I really wasn't willing to get in there and put the risk on the table. Hence, I just left it to run. Beautiful setup, but took a pass on this one. So the lesson I took away from this is that even when price takes the high as well as the low, I'm still going to stick to my idea because the idea is most likely going to pan out. It's not the first time we took the high end. We took the low. I did a video just the other day where in fact, I can probably go and show it to you on the hourly chart as well. Uh, we can go back, or we can even glance at that right here. 19th. Remember, we took this low, and then we also took this high. Was it on the 19th? Yeah. Well, I think so. At least I think so. But anyway. Oh, no, I think it was the 17th. Not 100% sure. But anyway. Yeah, it was on the 17th. We took the low, and then it longed. And we also had a short idea from the high. We also had the short idea. Nonetheless, go on the channel. If you watch the previous videos, you'll know what I'm talking about. Okay. We had a similar scenario to this where price took the high and it took the low. In that case, we took the low and then we took the high. So there was a long idea and there was a short idea. Now, in this scenario, we took the high first. We then rallied down and we took the low, came back up into the range, closed bearish, like you see right here. We had a bearish closure. So that permits me in the next candle, as soon as this closes, I can go in looking for shorts. If this closed bullish, then obviously I wouldn't go in there looking for short ideas. Then I would need to wait for the next candle to close bearish, and then I would be permitted to go in looking for shorts. So that's what I saw there. And that's my reasoning behind why I didn't get in there. And I absolutely do not regret not taking the trade. What it's shown me is that even though we've taken both sides, the model is still going to play out. Same thing as we saw um, gone back too far. Same thing that we saw. Same thing we saw here. Yeah, this was it. It was on the 17th, guys. Remember, we had this low in place. We took that out, closed bullish. There was a long idea. We had this high, and we closed bearish, and there was a short idea inside of that. I remember it like that. Same exact thing happened there. So this is the second time that I've seen that, and the model has played out. So the model has given me proof that it's played out. So there's no need for me to doubt next time it does the same thing. Price delivers the same way, takes out the high, takes out the low. Everything's valid, gives me the bearish closure. I'm looking for a short. Then I'm going to go in there and I'm going to take it. So there's that little trade. Beautiful. It ended up being a really beautiful trade. Really beautiful. Very clean. We traded up in there one last time. I was watching a trade right into it. I mean, if you took an entry right in there, no drawdown, pulled back, hung around here for a little while, and then rallied. One swoop, rallied. We'll look at this in a 1 minute. Let's get to this. 1 minute. Here's the 1 minute. We traded up. Traded up, pulled back. This is what I was talking about. Barely hung around. And then we lower, and it was done for. That was it. Um, so for everybody that's not aware, February 25th, which is tomorrow, we have Nvidia earnings. Just be aware of that. Nvidia earnings will take place. That is not something that is shown on the Forex Factory calendar, but we do have Nvidia earnings stepping into play. So keep that in mind when we're going into today as well as tomorrow. Also have quite a lackluster week this week. This is the last week of February. Next week we open, let's see here, or let me see. Yeah. Sunday is going to be the 1st of March. So keep in mind that we are going into a new month. Seasonal tendency, by the way, for this last week of March is pretty much sideways, uh, slightly trending higher. That is on the 15 and the 24. The 5 year basically has that same slight little uptrend. So choppy sideways, but still trading a bit higher. So far, we've pretty much seen price just trading sideways. So we're sticking with that. Sideways, but slightly trading higher. Uh, Contrast in comparison to the dollar, which is dollar has been in a consolidation as well, but we have been trading higher on dollar index, which would give uh, your future pairs resistance to run higher. So keep that in mind. Seasonal tendency for dollar index. We pretty much see dollar forming a low and then doing a pullback on the 5 year as well as the 15 year, and the 35 year just as a consolidation. It trades higher and then ends off with a pullback lower, whereas the 5 and the 15 year trades lower and pulls back higher to close it off. So there you have that. One last thing we could just take a look at here to compare is the yields. Yields should be trading with dollar index. At this point in time, they are not. Dollar index is relevant. We can just take a look at dollar as well. There's dollar index. Take this stuff off. We just need to see the bear chart. Dollar is rallying higher. This is rallying lower. Keep in mind, yields are supposed to trade along with dollar, so they're currently out of sync. And then you have bonds, which should be opposing dollar index, which it's not. It's trading with dollar index. We can see that. Give you another view of it. One last view of yields. So there you go. There's that as well. So there you have it. And we're sitting in consolidation here. Seasonal tendency for next month, March, April, pretty much has that, in the 24 year, we For March, not April. Pretty much for March, we have slow uptrending, choppy price action on the 24 and 15 year. On the 5 year, we got a slow and choppy run higher, but then the third week of March, we get a sharp pullback. We get a sharp pullback before we continue with that run. For dollar index, we on the 15 and 35 year, we rally lower. We form a high, we rally lower. For the 5 year, it's pretty much sideways consolidation for the whole month. So far, it looks like we're rallying higher to put this high in place. But we'll just have to see what happens. But until I see you in the next one, stay safe and go well.